Welcome back. Well, in a bit we'll get the dealing room check as well, going with Nimesh. But before that, we have Mayuresh Joshi now joining us from William O'Neill. The market, by the way, is still trying to negotiate in the range, and it's not breaking down though. That's something which is quite clear. Mayuresh, hi, good afternoon. I wanted your thoughts on the Adani Group. Any thoughts here? Any reason why we have Adani Power up 14%, ports up 9%, Adani Enterprises also up about 5 to 6%?
Afternoon, Anuj. No, again, I think the entire intention of the Adani Group to lower its pledged holdings to zero over the next 12 to 18 months, I think that's substantially carrying all these stock prices higher from where they were. Now, if you probably look at how their pledges are, and if they get it down to zero over the next 12 months, I think that's a substantial improvement. What the promoters have also done is the outstanding debt exposure that has come down significantly as well. So if you're probably talking about 12,000 odd crores and it's come down to around 8,500, leading to some release in pledge at this point of time, I think those are the major reasons why these stocks are flaring up in today's trade.
Okay, fair enough. Just looking at some more names. Mayuresh, any thoughts on UPL?
Yeah, I think the debt reduction of 900 million odd, which they've done over the past few weeks and months, I think the stock price aptly reacted to the whole scenario. Now, what you're probably hearing in terms of a gazetted notification coming through, and if that order does pass through, and it is an if-but scenario at this point of time, it's a 10% kind of a hit in terms of the India sales that UPL will have. If you probably look at the larger picture, Anuj, in terms of the Asta acquisition as well, and what is expected in terms of revenue growth going forward, apart from the revenue and the cost synergies of 500 odd million combined together over the next few years, I think the kind of hit that they might take if this happens can be anywhere to the tune of 3 to 4% in terms of top line, and that's the back of the envelope calculation at this point of time. So I think there might be a EPS cut where the expectations were around 45 odd rupees for FY22 coming down to around 41 odd rupees, which can just take it a tad bit lower in terms of the overall valuations. So I think it's a wait and watch situation. I think let's see what comes through. But I think the hit in terms of even if this comes through is going to be very, very minimal from a balance sheet perspective. And the overall prospects from a 2-year perspective obviously look very, very good for the company itself.
Okay, Mayuresh, your thoughts on ITC stock?
No, so Anuj, the stock has basically done nothing over the last few weeks. Yes, from a valuation perspective, it is very, very attractively placed compared to its peers. But if you still look at the cash flow generation, and the majority of the cash is still generated by the cigarette business itself, so the EBIT contribution for the cigarette is very, very significant. You really can't say, I think, how the government regulations might actually move in terms of saying taxes moving higher. And the investments that they've done in their other businesses as well, yes, they've started to pay off, but I think because of the lockdowns, the stickiness, for example, in the hotels business, the paperboard business, the other FMCG might still very well hold out. So I think valuations attractive, cash flows are very, very strong. But I think all these factors specifically related to the cigarette business still keep the stock in check.
All right, Mayuresh, thanks a lot for joining us. Ashwani, Mitesh and Prakash, thanks to you as well.